Joining me today on NYSE Floor Talk is Peter Zacho. He is the CEO at Navigator Gas. Mads, fantastic to see you again. Thanks for joining me.
Thank you so much for the warm welcome.
Thank you. So now, Mads, Navigator Gas is a diversified gas shipping company.
Yes.
Tell me about the outlook for your three major markets.
Yeah, so we're in LPG, we're in ammonia, and we're in petrochemicals. And all of the three business lines, they're doing really well right now. LPG is lots of production growth and lots of demand for energy around the world, so it's robust. Even better is the ammonia business, where we are transporting ammonia that's used for fertilizers for the food production industry, and that is also great demand and seeing growing volumes here. But lastly, and most importantly, is the petrochemicals business, where we export a lot of ethylene. Demand is great. We are opening a new terminal later this year, or an extension of the one we have, and here we'll see growing volumes into next year. So the outlook for the petrochemicals or ethylene business is really robust right now.
So, Mads, you mentioned ethylene. Navigator is unique as a shipping company as you co-own an onshore ethylene export terminal.
Yeah.
So tell me, what are some of the competitive and strategic advantages of co-owning this asset?
Yeah, no, there are some really good benefits for the customers. It means that the supply chain is integrated so that they can have their volumes moving in a predictable way, and that's good for no downtime, no idle time. At the same time, it also means that we can ensure that our ships are at the right place at the right time, which is also good for us. It means that we have higher earnings that way. So there are a lot of benefits, and most importantly, I think, is the stable cash flow that we get from our terminals business. So it's a really good combination together with a shipping business that may be a little bit more volatile. So together it gives overall great cash flows and stable cash flows for Navigator.
Now, in terms of capital allocation, it seems like you're taking a balanced approach to deploying capital, access growth, and dividends / share buybacks. So tell me about these capital allocation decisions and what your uses of capital will be going forward.
Yeah, we have been the beneficiaries of very robust cash flows in the past few years, and we think that the outlook is equally good. And that means that we've been able to reduce debt over the past couple of years, so now we have a very robust, very strong balance sheet. We've probably come to the end. We don't need to reduce debt anymore. That means that we've been able to increase capital distribution to our shareholders. We've done a number of share buybacks. We've done dividend payouts to the shareholders. So that has been an important component over the past year and a half or so. And case in point, just 2 weeks ago, we did a large share buyback where we bought back about 5% of our total outstanding share. And that's, of course, a good use of our funds. Lastly, and equally important, is also growth. So we are looking at opportunities in our shipping business where we can consolidate the market, looking for opportunities to do that. But over time, you'll also see some new buildings. We'll be ordering new ships at the right point in time to grow the shipping business. And on top of that, the terminal expansion that I mentioned before, we are investing into that, and we'll be looking for other opportunities to grow infrastructure in our portfolio, so we'll have even more of that stable cash flow I was talking about.
All right, well, Zax, it's always wonderful to talk with you.
No, thank you, and thank you for inviting us here to New York Stock Exchange. I even saw that the share price was up by 3% today, so what better welcome could I have?
Pleasure to have you, Zax.
Thank you.